Just 24 hours after markets celebrated Iran's peace signals with their best rally in nearly a year, everything reversed. On the night of April 1st, President Donald Trump delivered his first primetime national address since the Iran war began, and markets responded with immediate fear. According to CNN and Sherwood News, Trump declared, "We are going to hit them extremely hard over the next 2 to 3 weeks," and added that the war is nearing completion. But Wall Street did not believe him. They heard one thing clearly: the war is not ending yet. According to Reuters, Brent crude futures surged $4.88, or 4.8%, jumping to $106.04 per barrel within hours of the speech. U.S. benchmark West Texas intermediate crude climbed 4.2% to $104.29 per barrel. According to Sherwood News, WTI futures had actually jumped more than 6% in the immediate minutes after Trump's address. According to Bloomberg, stocks and bonds both fell as Trump's speech undermined expectations of an imminent resolution to the now 5-week-old conflict. Across Asia on Thursday, April 2nd, according to CNN and the Associated Press, Japan's Nikkei 225 fell 2.1%, South Korea's Kospi slid 3.9%, and Hong Kong's Hang Seng dropped 1%. Now here is what made markets particularly nervous. According to CNN, Trump gave no specific timeline, no exit strategy, and no details on how the Strait of Hormuz would reopen. He said the strait would just open up naturally, but gave no plan for how that would happen. Iran has repeatedly vowed to keep the strait closed indefinitely. According to CNN, Trump also renewed his threat to bomb Iran's power plants and energy infrastructure if Iran's new leadership fails to agree to his demands. The same threat that had rattled markets repeatedly over the past 5 weeks. According to investing.com, Trump said, "We are going to finish the job and we're going to finish it very fast." But markets have now heard similar claims multiple times without resolution. This whiplash is now the defining pattern of this entire crisis. According to CNBC, just one day earlier, on Tuesday, March 31st, the Dow had surged 1,225 points, its best day since May, after Iran's president signaled willingness to end the war. Now, less than 48 hours later, those gains are being unwound. According to Bloomberg, the S&P 500 energy sector rose 10% in March alone and 37% in the first quarter of 2026, making it the second-best quarter for energy stocks on record going back to 1999. That tells you exactly who is winning from this crisis: oil companies. Everyone else is losing. For ordinary Americans, the picture remains painful. According to 8AA data reported by CNBC, national gas prices are above $4 per gallon for the first time since 2022, while diesel sits at $5.45 per gallon, crushing trucking, freight, and delivery costs across the entire economy. According to the Washington Times, the 10-year Treasury yield has surged from 3.97% before the war to as high as 4.43%, pushing up mortgage rates and loan costs for millions of households. Hopes for Federal Reserve interest rate cuts this year have now effectively collapsed. According to Capital Economics, quoted by Euronews, "De-escalation hopes have given markets a lift, but we think the effects of the war would, in many cases, persist even if it were to end soon." That is the hard truth. Even a ceasefire tomorrow would not immediately fix supply chains, reopen the Strait of Hormuz, or bring gas prices back down to pre-war levels. The practical message for viewers right now is this: do not trade the headlines. This market is flipping direction every 24 to 48 hours based on Trump's statements alone. According to Bloomberg, the single reliable indicator to watch remains Brent crude oil. If it breaks and holds below $100 per barrel, that signals genuine de-escalation. Until then, every rally is fragile and every sell-off is a warning. Stay cautious, stay liquid, and watch the oil price, not the speeches.